Hello guys, welcome to the Train Parrot. It's roughly 9 AM in UK time. We are 4 hours away from the core inflation rate report. There's many people expectating and speculating what's gonna be the outcome from this. In today's video, you're gonna see me making a complete revamp of the 1 to 5 pattern. Basically, I'm gonna make the impossible to make it match what happened in 2020. And we're also going to discuss the current situation, which is critical on the 4 hour. We are right below resistance on the daily as well. And if you missed my Telegram message last night, precisely 12 hours ago, I showed this message on Twitter, Telegram, and Instagram. The links are in the description if you want to join them. RSI 4 hour managed to close above the global support red line. The question now is, are we gonna manage to regain 97.5? At the time I was posting this, the price of Bitcoin was roughly 96k, and I referenced to my miracle scenario that I cover in yesterday's video on CoinBureau Trading, this one called Find Reversal Signs, which at the time I published the video, there were no signs of reversal. But then just a couple of hours after, we started seeing this. I want to talk about that. I want to talk about how far we managed to get into bullish territory and the kind of overall feeling I have that we are in a make or break situation at the moment. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. I am making everything that's possible to put 2 videos a day for Bitcoin, one in the morning, one in the evening, and an altcoin video in the middle of the day. For example, yesterday I published this one with Solana, ADA, XRP, CRV, Ethereum, and Tron. Make sure you don't miss it because the analysis covers daily and weekly, so you get both a long-term overview of the status of the coins together with a shorter-term kind of plan of action for it. I'm hoping today to do ADA again because yesterday, since I had to record the video twice due to the technical issues, the second time I recorded, I kind of got distracted and didn't do ADA and got confused because in the previous recording, I already did it. Anyways, let's hope that the technicals in my computer and my brain starts working today and I can get that Cardano analysis out for you guys. All right, let's go back into the content. And I think it's critical that we observe how much retail there is in here. We are at 43, which is less than 66 at the top, but a heck of a lot more than 18 just 40 days ago. So that is good. We got this meeting that happens on the 11th of December, the core inflation rate and inflation rates, and tomorrow we have the PPI as well, which is also relevant. We keep flicking between being in the red and in the green, but all the time something like -1% and then 1%, and it's been like that pretty much as we approach that meeting on the 11th of December. Notice that on the 12th of December in 2020 was the moment that we print this green candle that initiated the impulsive move from 18k, breaking finally the 20,000 resistance that was both psychological level and the previous cycle from 2020 all-time high. If we look at the history in the economic calendar, you can see that on the 10th of December in 2020, the core inflation rate reports were on the 10th of December. So basically on Thursday, on this red candle there, then we have another day of red, and then on Saturday, we started breaking out to the upside, creeping up, and only on the 16th of December, 6 days after the inflation rate reports, we broke out the 20,000. So now I'm going to do a huge abuse to this pattern. You're gonna see me fully reshaping the 1, 2, 3, 4, 5 pattern on the left hand side to force it to match the right hand side. And I know that I should be doing something different and moving on, but I am just so obsessed at this point in time with this pattern. And I think the first thing I'm going to do is I'm gonna say that this high in here doesn't coincide with that high there on the 30th of November. Instead, I'm gonna move this high to there. Then I'm gonna get rid of this touch and I'm gonna move the trend line like this to make sure that it touches in here that candle, and in here touches only a wick of the candle, and then in here we get the 5th point of the pattern and the 3rd touch with the trend line. So as you can see, I have abused the pattern. Definitely, I fully agree. And even by doing this, it doesn't look that similar. But now we get a test here on the 11th of December above this trend line. And we get something similar there. So I'm just going to leave it there and see if from here we start having that creeping up that goes 6 days post the inflation report and finally breaking above 100k, in this case it should be above 101 because we already broke above 100k, printing at daily close. Alright, let's move on to the 4 hour and let's see how we are approaching today. You can see that yesterday we managed to hold by the dollar the support at 36 RSI 4 hour, and that is the reason why we use these lines. I think it was pretty accurate and it ended up printing a hidden divergence as well. When I was posting this on Telegram, we were just pinching the support and I was seeing still the red candle below the trend line. So we were somewhere around here at 9 p.m. Now it's 9 a.m. and I'm pretty sure that we had been already facing the resistance at RSI 52. Let's update this to 52 because it was too quick. So it went straight to the top part of the RSI. Instead of doing it slowly towards the 51, it went straight to 52. So that resistance from 52 RSI is 98.2. Once again, for second time. We faced it yesterday around 1 p.m. UK time. It became an order block, rejecting 4% the price. That was a great short. And now we are pinching it once again. So you can see how many times we go to 98.2 and the RSI is meeting up with this. So far is rejecting it, and we have a confluence of both 98.2 RSI, and let me hide the RSI reverse, and you can see that also the trend line coming from Lux Algo is also the area of resistance. So what I said yesterday in the video of find reversal signs, if you missed that, make sure that next time you don't miss it by subscribing Coin Bureau Trading channel, is that the recipe for a recovery is regaining this area in here. And I made a video when we were here putting this double bottom with 2 weeks at 94k, and indeed the second week is slightly higher, which is also great. We say that the recipe is to come and challenge this level and close above it. So far it's a rejection. I suspect that it might stay there for a little bit longer just because the meeting is about to happen, and this is the perfect area for make or break. What I mean by that is precisely what I said yesterday. This is a perfect area for a rejection and for going sub 90s if we confirm it, but it's also the area that we need to break above, close it to continue going to the upside and put a new high and start liquidating all these shorts that are located around here. Notice though that the price for the market maker, if they decided to go for this liquidity, is less than the price than if they go to the upside. So they are definitely going to have to balance out the size of the liquidation versus how feasible, how difficult it is at the moment to get the price up 7k versus dropping it 8k. Pretty much is in the middle. So I have a strong feeling that the direction of the price is going to be based on how people perceive the outcome of the event. Let's go to the daily time frame, and you're gonna see that there are some similarities against the 4 hour. On the 4 hour, we have the breakdown below the range, below this trend line, and now we are facing it as resistance. On the daily, we have a very similar picture. We broke down, in this case, a much more impressive support, which spans all the way to the beginning of August. We closed below it, and now we are testing it again as resistance. So both scenarios are putting the price in such a make or break situation, because literally if price sees a rejection in here, it can very easily hit sub 90s, at least somewhere around 89, 88 as a conservative target, and as a much more aggressive one, sub 80s, hitting potentially the CME gap. We have repeat countless times that that is not what we are doing typically at this point in time in the cycle, so it's very low likely. Typically this sort of drawdown we reserve it once this, which is supposed to be the strongest leg coming in at this point in the cycle, that typically spans up until around March, and then maybe in summer we see those sort of drawdowns of 30% or more. If we were to close the CME gap, that will create a drawdown of 26%. Thinking twice about it, it's not that big of a deal for a drawdown of January, but maybe for December is too much, because last December in 2020 we only have 16%, and we are expected to have diminishing volatility. So it will be a bit of an out of season event if we did something like that, but it's doable, low likely. So we got the resistance on the daily at 60 and the support support, I remember, from last night at 30. Let's look at that in the price, and you can see how accurate that was so far today. We literally stopped right there at the resistance at 98.4. It's a moving target, so when the price moves, the target of the RSI also moves, but there is probably a difference of a couple of dollars, literally. And at the moment, it looks like a rejection, both from the RSI level, number 2 from the point of control. So we are on the lower end, below the point of control, slightly above the trend line, but that depends on where you place the trend line, which is, as you can see from what I did before, something that you can even play with. It's not very objective sometimes. So I much rather trusting the point of control at this point in time and the fact that we are below resistance on the RSI. And I think things can become a lot clearer if we regain the previous range above the white line. And even more impressive if we break above RSI daily 65 with a local breakout above this red line in there. Reaching an RSI of 65 at this point will take us back to 101.5, and that is just the next resistance. If we make it to 85 on the RSI, that at the moment is at 135k on the daily. That 85 is the top of the range based on these diminishing tops from the RSI that at the moment should be between 85 and 86 RSI. I think it's low likely that we get that high in just one hit, but it's good to keep it in mind as a range. Inflows on the ETFs continue to be on the positive, and we are back below extreme greed at a level of 74. Now it's only greed. You can see in the short term the liquidity is not really very attractive between 102 and 90k. Nothing really stands out that much. Things start getting interesting above 102k. Yes, there is some from 100 to 102, but not that much really. At the moment we are hitting this chunk in here starting from 98, and below the price we continue to have the sub 90s and the 85. I have accumulated this triangle in the longer term liquidities so we can remember where it is located. You can pretty much confirm when we look at the bid and ask liquidity that every time that the green lines step in, we are very close for the price to do a bounce back up. At this point in time there is a period of indecision and the traders are taking profits very early. So if you enter at 94, that gives an upside of only 4% in here. During yesterday's video we reached 0.37 in the ratio, which is extremely high, higher than everything that we have seen since late November, and that has helped the price to do another 4% to the upside. But in this area in here it took way less to get a 15% to the upside. So I think sustained bidding liquidity, which means that the ratio between orders longing versus shorting above and below the price definitely have an impact in the direction of the price, as you can see in here, and I will continue to monitor that every time that we start having some sort of thesis on direction of the price. I remind you that so far what we have done is just to go back below resistance today, and price really needs to make a decision. There is a make or break situation. So if you are left from this video with the feeling of, wait a minute, am I gonna buy or sell? You're not telling me. Well, that's because price hasn't decided to do any of that in lower time frames. If you go to the 1 hour and you want to take a higher risk, you can see that this trend line has broken out on the 1 hour with a target of 72, but that's just the 1 hour. That is bullish, but I prefer to stay away from lower time frames because 1, there is many more fake outs. 2, because I don't have time to react to the 1 hour time frame. I barely have time to react to the 4 hour with all the things I'm doing at the same time. I used to trade the 15-minute and it gets really stressing at times. 1 hour is still stressing. 4 hour for me is the perfect balance for my lifestyle, but you choose your own poison. At the moment we are consuming the fair value gap that ends at 98.750. The question is, what are we gonna do there after that resistance? Because we have another fair value gap above 102k, and below the price we have nothing, only 85k. So just doing an isolated analysis looking at fair value gaps, price needs to make a decision in here again of a make or break. Do we go back again to the 102 and then continue up or reject, or is this all that we're gonna take and today people are gonna get disappointed and then we go below 90s? Well, I guess during the day, during the meeting, I should be looking at the 4 hour hour and even the 1 hour time frame to see if there's any other hints of reversals to any side. I insist that the balance sheet should tell us something, and we had a breakout in terms of the Fed having increased their holdings in their balance sheets, which is bullish, a 7% up. But I remind you that last cycle by June 2020, there was already an increase of 113% and then a second breakout with another 56%. All of that definitely contribute to help Bitcoin have an extensive rally into March in the most beautiful and longest altcoin season of 134 days. Now, this is what we're getting, 7%, and the M2 money supply has reduced 3% in the macroeconomy, and you can see that now it's even pointing down in here. So take in consideration that when it comes to liquidity, we have less. These indicators are delayed, they don't update every day, so if something changes dramatically, I don't see it in the charts. I'm just judging from what I can see with at least 1 week of delay. Also, dollar is breaking out today to the upside. So far on the weekly candle, it's above 106.5, my resistance, which is not great, not bullish for risk on assets, and gold hasn't broken the previous high, but is printing a green candle, which is also not great. This is shouting that people are having a little bit of concerns. So guys, let me know in the comments if you want me today to put out a video about altcoins and which altcoins. That's gonna come probably in 4 hours after this video, but at that point we're gonna get also the results of the meeting in regards to the inflation. At that point we might have a breakout or not, in which case I can go live and cover it as things are moving, or I can put a summary video focusing on Bitcoin. So you decide. Write down that in the description as a comment, give the video a like, that always helps. In the evening usually I put an update on Bitcoin, so maybe 3 updates on Bitcoin in the same day is too much. You tell me in the comments, I will respect whichever gets more votes, in this case more comments. Guys, if you want to trade with an awesome exchange that has access to the most altcoins, future perpetual contracts, best support for API when connecting to trading bots, Bybit is my exchange of preference at the moment, and if you open a new account with them using the link in the description, you can unlock up to 30,000 in rewards based on trading volume and get the lowest fees to trade. But this is an exchange that requires KYC to use it and is restricted in some countries. So I have 2 other alternative exchanges that are also pretty good that do not require KYC. There is Bluffing and there is 2bit. I'm offering 2 because some people have found that in certain states or in certain countries they need a VPN to use it. So my recommendation is try either, do your own research and decide which one works where you live. I'm pretty sure that one of them is gonna work and offer you leverage, access to trading altcoins, no issues with deposits and withdrawals where you live. Bluffing at the moment is offering a campaign that ends in 3 days with bonuses for deposits and for trading volume and the lowest fees to trade if you use my link in the description. And 2bit, the top exchange in the list of products that I use at the moment, is offering 9k bonus and a 40% fee discount. 2bit is a copycat of Bybit from the same people that built Bybit, but in this case a great alternative non-KYC. Alright guys, I see you later. Take care. Bye bye.